So most business owners, they're doing accounting all wrong. I've seen plenty of businesses create millions of dollars in revenue, but yet they can't seem to get out of living month to month or paycheck to paycheck. And if you're a business owner and the word accounting kind of makes your head spin or your stomach curl, then go ahead and stop what you're doing and watch this video. So I actually had a client come to me. They were producing well over $30 million a year in revenue. And yet for whatever reason, they felt like they kept having to put more money back into the business. Like the money was just disappearing. So we looked at the books and guess what? It wasn't theft. It wasn't fraud. It was accounting, or better yet, the lack of accounting. And it doesn't matter if you're creating $10,000 a year or $10 million a year. If you don't really know how to approach accounting and if you don't know the right questions to ask, you could be causing yourself to lose money. So today, I'm going to break down the basics of accounting that you need to know for every small business owner, whether you're just starting or you're doing several millions and you're 10 to 20 years in operations. And by the end of the video, you're going to know how to avoid turning profits into panic. So let's get started. So first things first, don't mix business with pleasure. Or let's say business with personal. So the first thing you got to do is you have to open up a business bank account. Now, inside of that bank account, you are only doing transactions for the business. Anything that should be personal should be done out of your personal bank account. You should have two separate accounts. Now, this may sound obvious, right? But at the end of the day, there are so many small business owners who are still doing this. Or maybe they'll have a personal credit card that they're swiping, and then they'll just say, all right, let's open up our personal credit card statement and make sure that these little individual transactions, they get credited back to the business. Now, to be fair, at the end of the day, with really good accounting, we can still kind of isolate those transactions and swap them over, but we have to think really what is the importance of us separating these two? First off, the IRS will be all over you like flies on. If the IRS senses that we are commingling, that will raise the red flag and they may come down and audit us and want to see every single transaction properly separated and accounted for. Obviously, we don't want the IRS there, but the second reason is if we were to get sued and we were to go to the court will really be trying to push against us commingling, saying, hey, look, they haven't treated this as a business. They've been mixing business with personal. Therefore, all of this liability protection from this company would be null and void. And now that would open up all of our personal assets as well. So we definitely don't want to mix business with personal. The second thing that we have to learn as business owners is the basics of bookkeeping. Now, yes, you can go out and hire a bookkeeper, but if they do all of the work and present the financials to you and you don't know how to read it, what was the whole point of it in the first place? In reality, bookkeeping is just tracking your money in and your money out. In essence, it's showing you what you earn, what you spend, and what you keep, recognized as income or revenue, expenses, and profit. Now, that's where most small business owners will stop. But in reality, there's something called a balance sheet. That's actually going to track your assets. It's going to track the things that can be depreciated. And then there's a cash flow statement that shows you, hey, look, even though these different expenses or these different cash items don't show up on the income statement, you're still spending money on. And what most people don't understand is without the basic knowledge of bookkeeping, your Excel spreadsheets are not going to work the way that you want it to. So get QuickBooks, get Wave, get some sort of accounting software that is meant for accounting. And don't wait to do this at the end of the year when it's tax season, because now all you've done is shot yourself in the foot. The CPA really can't help you, or your tax preparer really can't help you until your books are in line, at least to a degree. And if they're done incorrectly, then you could be missing out on thousands of dollars in savings, which leads us directly into number 3, which is understand how to read your financial statement. So we just talked about it. We have a profit and loss sheet, we have a balance sheet, and we have a statement of cash flows. Now, you don't have to be a financial analyst, you don't have to be a full-blown accountant, but as a small business owner, you have to understand how your company is performing. So just knowing how to read these statements and understanding what's causing you to lose money and what's causing you to earn or to keep money will help you make strategic decisions that otherwise feel like you're trying to figure out something in the dark. Knowing how to read these statements can save you a lot of headache and actually allow you to keep a lot more of your money. And if you're looking to learn how to read it, we do have some videos on the channel talking about how to go through each one of those financial statements and what's important to the business owner at the end of the day. Now, the fourth thing we want to cover is common mistakes to avoid. Now, there's 3 big ones that come up often that if we just simply avoid them, we're going to be a lot better at the end of the day. Mistake number 1, waiting until the end of the year to try to get your books and your financial statements up to date. If we just do this throughout the year, 1, we know it's going to be a lot more accurate because we can actually remember what happened 30 days before a lot better than we can remember what happened 12 months before. So doing this monthly will help us not only be more accurate, but be timely in getting our taxes done. month. The second big mistake is not actually allocating any money for taxes. So as we know as business owners, most of the time what ends up happening is we have to pay taxes at the end of the year. Now, yes, we get a lot of tax benefits. Yes, we get some deductions that other people don't get, but oftentimes we are not paying taxes in the same way that a W-2 employee will, meaning it's not being garnished from our wages, if you will. Now, what's often recommended is about 20 to 30% of your income be put aside for taxes. Now, that may be a lot, but at the end of the day, you will make sure that you have enough to cover your tax bill at the end of the year. And then whatever's left over, that's a bonus. You get to use it however you wish inside of your company. And number three, biggest mistake is oftentimes entrepreneurs think that profits equals cash. And that's just not true. Profits are what is shown on an income statement. Money you make versus money that you spent and is recognized as being spent in that period, right? For the year or for the month. But as we talked about, there's a statement of cash flows, right? So a good example is a property mortgage, not necessarily a home, but an investment property mortgage. All right. If we have a mortgage payment, some of it is interest. The other piece is principal, all right? When you pay the interest, that is a deduction on your P&L. When you pay the principal, that gets moved off of the balance sheet. So the statement of cash flows actually gets to show you the difference between profit and cash. Now, once our client came to us and we worked through all the pieces, not only were they able to see where the money was going, but they were able to now change their pricing model. They were changing how they acquired new properties to flip them. They were changing how they actually ran the construction crew because they got a good overall view of how their company was performing, what was costing them money, and what was the primary driver for them earning the money. So if you're a small business owner and accounting has been stressful, almost like a foreign language, hopefully this gives you something to go and research so you can start to feel a little bit more clear about what it is and how your business is operating. And if you want to learn more about financial reports, how to read them, and if you're serious about really leveling up your business, then go ahead and hit the like and subscribe so you can be notified when more videos like this are coming out. As always, thanks for watching, and we'll see you next time.